Portfolio Builder members, it's great to be back home. We are starting back up the 2 updates per day. This will be a quick review of the trade alert. Market enters danger zone. Look for an update later this evening, and also webinars will begin next week. We made 75 cents a share on the last trade alert, which is a 47% annualized return. So I'm going to quickly go over the trade alert so we get this out. Big news is the Fed is anticipating lowering rates. Stock market broke into new highs, and the trade war continues to slip down a slippery slope. So we were very defensive over the last several weeks, worried that the escalation could begin over the holiday, although I thought that seemed a little unlikely that we would rattle up our own investors during the 4th of July. So far, so good. Trade alert today is to buy to close the July 10th, 2019 297 call option, and then to also sell to close the July 12th 293 put. Step 2, for every 100 shares of the SPY you own, enter one of the following contracts. Sell to open the July 12th 2019 299.50 call for 42-cent credit. We're taking that credit and we're buying a put option that expires the same date. So we're buying less time premium, but we're able to move the strike up higher because of that. So you might be thinking, well, I'm making nothing on this, but that's not true. What happens is if the SPY ETF goes down, we have very, very limited losses, and we actually can see our put option go up in value while we get to keep that credit. On the other hand, if the SPY goes higher, we have a built-in potential profit of about $1.64. And that's the difference between the trading price and the strike price where we're selling our call option. So we're essentially allowing call option gamblers to give us a very good safety net so that the worst we can walk away from this trade is selling our shares for $296. So this will be the format of our trade alert until things do get a little nastier. And if they do get nastier, you can see us probably rotating back into some FXI put options and also starting to pay for a little bit more expiration premium and also pushing that strike closer to the trading price. Right now, volatility is extremely low, so we have to do trades just like this to profit. So in times like this, we're not trying to make that much money from the option market. We're using it to finance a cheap put option, and then we're letting the SPY go up in value to generate the profits. I've also closed out these 2 put options. You may not have them in your portfolio, but if you do, you can just get them out of there. They only sold for a penny. And I'm not closing my FXI put options, as I think the trade war will escalate and that China will be pounded into the ground until they give us what we want. So to summarize what happened, the SPY went from 296.75 to 297.94 for a $1.19 gain. The call option started off with a 94-cent credit, but we had to pay a $1.08 debit for a negative 14-cent return. The put option lost value. We paid 41 cents and only got 11 cents back today for negative 30 cents. Add that all up, that's 75 cents a share. If we round up the SPY to be $300 a share and make a 75-cent gain, that's a 0.25% or a 25 basis point return, which may not sound like a lot, but if you can do that 156 times a year, remember there's 3 of these a week, 52 weeks a year. Sure, there's a few holidays, so this is just an approximation. Your 30K grows into 44.2. That's a 47% annualized return. So unless you think the SPY ETF is going to somewhere around $450 in the next 12 months, you're not going to outperform this strategy with buy and hold. All in all, our total return is at 8.86%, and our goal is just to sneak in a safe and sound, sleep like a baby 1% a month. If we do better than that, great. But what I care about the most is protecting our capital and reducing losses of sharp downturns in the market. So that put option we're buying puts a hard stop at the maximum loss. So that's our trade alert for today. Look for a new update later this afternoon. There's all sorts of drama happening right now. with lots of implications. So we will keep you apprised of all the hot news and plans for our various portfolios. Thanks again, and it's great to be back. We'll be back to our normal content schedule from here on out.